Hi everybody, it's FIBO Group and you are watching to the Market Watch Review. The Lunar New Year holiday closed many Asian centers until the middle of this week. However, China's mainland remains open for business throughout the week. Some notable hawks signaled a slowdown in Fed tightening and helped to lift risk appetites before the weekend. The S&P 500 saw a 4-day drop. The NASDAQ saw its biggest gain since November last year, just before the weekend. Stoxx 600 in Europe is showing a modest gain. Contrary to Fed signals of a quarter-point hike next week, the ECB has committed to 50 BP. The hawks want another 50 BP for March. Although the divergence lifted the euro to $1.09 today, it is struggling with maintaining momentum in the European morning. Asian Pacific market. Commercial banks were offered 1 trillion yen 5-year loans by the Bank of Japan at 0.145%. This is a few basis points less than the JGB yields 5-year interest rate for buying government bonds. It is the longest-term loan and was almost 3 times oversubscribed. Last week, Bank of Japan increased flexibility in this facility. Governor Kuroda suggested that it might consider making loans at a negative interest rate if necessary. In quiet turnover, the dollar trades in the same range as the Japanese yen during the week. Pre-weekend, the Australian dollar has seen an extension of its advance and is now trying to gain a foothold over $0.7000. This has been elusive despite intraday penetration last Wednesday. Market of Europe. France and Germany seem to agree that Europe must respond to the approximately $500 billion tax and subsidy the U.S. has approved for EV, batteries, and semiconductors. The euro climbed above $1.0925 during holiday-thin Asian trade, but it was unable to make the $1.8090 mark in early Europe. Contrary to signals from Fed hawks, such as Governor Waller that a quarter-point move next week might be appropriate, ECB hawks still pushed for a half-point movement next week and in March. Sterling was slightly closer to $1.2450. It took out the mid-December high in Asia by a few hundredths of cents, but was offered in Europe this morning. Market of America. Today's busy week starts slowly with the December leading economic indicators. These indicators have been falling every month since November, except February. Highlights of the week include the Thursday first estimate of fourth quarter GDP and Friday's PCE deflator. Wednesday is Bank of Canada meeting. Last week, the Canadian dollar settled at CAD 1.3375. Today, follow-through selling is at almost 1.3340. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.